Hello, my name is Jasmine Blake. I have chosen a risky stock, which is Coinbase Global, and let's just get into it. So, I've been keeping track of the closed prices every day since the semester has started until December the 1st. And it's been a very rocky road with Coinbase as it is a very risky stock. So, I have all the information right here, and that's how I got this graph right here. But I'm going to give you a little background on Coinbase really quickly, and then we're going to go through the ups and downs of Coinbase. So, just a little overview. As I stated, I've been doing this project with my team over the semester. And Coinbase Global is an American publicly traded company that operates as a secure cryptocurrency exchange platform. Coinbase allows its users to buy, sell, trade, and transfer and store cryptocurrencies. Coinbase is geared to the beginner investors who are interested in the cryptocurrency market and are looking to invest, but Coinbase also offers premium professional level training where customers are heavily active traders and they can learn how to be professional traders, professionally traders. And with that being said, Coinbase Global is a very risky stock on every metric. I've been investing in Coinbase for about 4 months and I've lost $6,249.49. I have an average negative 30.71% loss, and the current price for the Coinbase Global is $46.38 as of today. And when I started investing in Coinbase Global in August, the average price was $95. So you can see that is a significant drop. Coinbase is a very volatile industry as it is dealing with cryptocurrencies, which is another very volatile industry. Coinbase performance is mainly based off cryptocurrencies. So, when the market is going well for cryptocurrencies, Coinbase will excel as there will be more members using their platform to trade cryptocurrencies. But when the cryptocurrency market is going down, Coinbase takes a massive hit as most of their users start to sell off their stock, and they are less likely to attract new investors who want to invest in cryptocurrencies, which that means the less users that Coinbase platform has when there's a rift in the cryptocurrencies, that means there's going to be a price reduction in their share price because investors are going to start to pull out. And recently, what I've been following as I've done this project, FTX has a major impact on Coinbase. Recently, FTX which is another cryptocurrency exchange platform, they went under, they went bankrupt after a prospective buyer from another company backed out of a deal to buy FTX because they realized it's just too volatile and FTX will not be able to come back. And I'm bringing FTX into this because since FTX is in the same market as Coinbase Global, a lot of people don't want to invest in Coinbase Global just because of FTX, because they felt if FTX couldn't make it, how is Coinbase going to make it? And Coinbase has been going down tremendously over time. And Coinbase is really doing their best to stay afloat, as you can tell, because most people predicted that this type of platform and industry would not last during these times of inflation. So let's get into, and some important facts. Coinbase has a beta of 2.75, which that means that it is a very risky asset. Any asset that has over a 1 beta is risky. And I invested $20,000 into Coinbase. And as I stated earlier, what my loss was around $6,000. So let's get into the ups and lows. So in September was a very busy month for Coinbase. As you can tell by looking at the line, just in September, there are a lot of drastic changes in Coinbase. In the beginning of the month, Coinbase Global was dealing with funding a class action lawsuit about privacy on its platform, which can explain the first decline. But then a little later in the month, Coinbase Ethereum merged with Beacon Chain Intels, which this had a major impact on the narrative of Ethereum and caused investors to invest in Ethereum, which means investors would use cryptocurrency exchange platforms to invest, which is why Coinbase saw a slight increase from September the 5th to September the 12th. But Coinbase had a very rocky September as the stock price kept fluctuating dramatically over short periods of time, just proving how volatile the Coinbase stock is. On to October. In October, Coinbase was dealing with heavy press on the lawsuit that was pressed against them about privacy. And in the beginning of October, Coinbase was experiencing technical difficulties on its platform, which halted trading for a period of time. And Coinbase stock prices took a hit again for 3 days. But the price for Coinbase rose again when the technical difficulties were resolved. And the price for Coinbase continued to raise when Visa decided to link up with FTX. This was before the bankruptcy, um, the trading platform, and they started to allow cryptocurrencies to be linked with credit card holders. So if you have Bitcoin, a certain amount of Bitcoin, you can put that on your credit card and use it wherever Bitcoin is accepted. So just because that happened to FTX, it caused Coinbase stock to go up. And as normal, Coinbase has a very rocky month since it is a very volatile stock from rising and falling prices every day. But Coinbase closed the month out declining in price by 8.1% due to the Bitcoin's decrease by 1.3%, which just goes to show how dependent Coinbase is on cryptocurrencies. And however the cryptocurrency market is, it can really make or break Coinbase. So, yeah, it is very volatile and very risky if you're going to invest in Coinbase because of the market that it's in. Now into November. Coinbase had a very bad November because of the FTX bankruptcy I spoke about in my overview. Coinbase is experiencing record low drop stock prices, drop prices and decreases. It's been reported that Coinbase has a net loss of 544.6 million in September the 30th. And normally Coinbase experiences loss in a crypto winter like this when people stop buying cryptocurrency for a period of time and cryptocurrency start trending down. But Coinbase took major hits in November and only saw a few peaks due to new partnerships or small peaks in cryptocurrencies. But lately, Coinbase has been trending downward lately, and it is best for investors in Coinbase to sell now before they lose all of their money, just like as I've lost $6,000 investing with Coinbase. FTX's whole bankruptcy is really dragging down Coinbase platforms, and Coinbase is seeing record low usage on its platforms due to FTX's bankruptcy. In conclusion, I would say this is a very risky stock and not to invest in Coinbase. And if you do, you have to be alert, buy low, and sell high as soon as possible, but it may not be worth the risk. And that's it. That's my analysis of the Coinbase, the stock trading that I've been doing for the past semester.
The stock that I chose was Berkshire Hathaway Stock B. Berkshire Hathaway is a conglomerate holding company, and the owner is Warren Buffett. They own businesses in insurance, rail transportation, energy generation and distribution, manufacturing, and retailing. They have 372,000 employees, in total assets of 958 billion and net income of 89 billion. I bought Berkshire Hathaway B because Berkshire Hathaway B was cheaper than Berkshire Hathaway A, and it is a low volatility stock that I knew about already. When I invested in Berkshire Hathaway B, it had a volatility of 0.2354. When I looked at the competitor in the industry, such as BlackRock and Carlyle Group, BlackRock had a 30-day volatility of 0.3582, and Carlyle Group had a 30-day volatility of 0.3529. This indicated that Berkshire Hathaway has a low volatility in its industry. The beta for Berkshire Hathaway whenever I invested was 0.93, which is less than 1, which means it's less risky than the economy and its competitors. Once again, BlackRock and Carlyle Group had 1.235 and 1.6693, which are both riskier than the economy. The current ratio for Berkshire Hathaway stocks B when I invested was 0.28, and BlackRock and Carlyle Group had 3.64 current ratio and a 0.3 current ratio. I invested on September 27th, and the average daily return of Berkshire B stock was higher than the average daily return of S&P 500 from when I invested. S&P 500 had a daily average return of 0.2%, and Berkshire Hathaway stock B had an average daily return of 0.4%. In September, the only major news that I saw for Berkshire Hathaway was that they had invested more money into the petroleum company Occidental. In October, it was said that Berkshire Hathaway's successor to Warren Buffett bought 168 shares of Berkshire Hathaway stock. They also completed an $11.6 billion deal to purchase Allegheny Corp. Berkshire Hathaway also had huge losses from Hurricane Ian, estimating them to be $3.4 billion. With all of this information, this leaves me with the conclusion that although Berkshire Hathaway has a less risky stock and the returns weren't higher, I was still able to have a better return than the S&P 500, which makes me think that in an economy when you're uncertain about the future, it's best to invest in a less risky stock than one that's risky, because they have more potential to fail than a stock that's been proven to survive many tests.